Imagine it's 1933. Your life savings aren't numbers on a screen. They're heavy, gold coins hidden under your floorboards. It's the only real money you trust while banks are failing all around you. Then, a voice on the radio, President Franklin D. Roosevelt, announces a new executive order. Suddenly, the gold you've treasured as your family's security is declared contraband. You have less than a month to turn it over to the government, or you'll be branded a criminal, facing a massive fine and a decade in prison. This wasn't a bad dream. It was Executive Order 6102, and it led to one of the most controversial acts in U.S. economic history. How on earth did a country like America arrive at such a drastic point? The stage was set by the 1929 stock market crash, which toppled the financial system. Banks collapsed like dominoes, igniting widespread panic. As trust in paper money evaporated, people rushed to withdraw their savings, often finding tellers had run out of bills. In response, families did what felt natural. They hoarded gold, tucking coins and bullion away in mattresses and safety deposit boxes. They trusted tangible metal far more than any paper. This hoarding had a devastating consequence. Prices spiraled downward in a vicious cycle of deflation. Businesses failed, factories fired workers, and farms foreclosed at alarming rates. By March 1933, unemployment had soared to 25%. When FDR took office, the country was on its knees. He declared a national banking holiday, closing every bank to stop the bleeding. But the core problem remained. The money supply was shrinking, partly because millions in gold sat hidden away while the economy starved for liquidity. Washington desperately needed that gold back to print more currency and inject life into the economy. Getting it would require a drastic move that would shake the foundations of American property rights. Then came the bombshell. On April 5, 1933, a White House executive order made its message unmistakable. Virtually every American had to hand over their gold coins, bullion, and certificates to the Federal Reserve by May 1st. There were narrow exceptions for dentists, jewelers, and coin collectors, and ordinary folks could keep up to $100 in gold coins, about 5 troy ounces. But beyond that, it was all going to Uncle Sam. The price was fixed at $20.67 per troy ounce. It was a take-it-or-leave-it proposition, except leaving it wasn't an option. Refusal could mean a felony conviction, 10 years in prison, and a crippling $10,000 fine. The government claimed its authority from the obscure Trading with the Enemy Act of 1917, a wartime law repurposed for a domestic economic war. The implication was clear. Citizens holding gold were akin to enemies of the state. Most people, scared and desperate for the crisis to end, complied. It was a monumental shift of assets, driven by a blend of patriotic duty, desperation, and the very real threat of severe penalties. With mountains of gold in government vaults, Congress passed the Gold Reserve Act of 1934. This repriced the metal, raising its value from $20.67 to $35 an ounce. This move devalued the dollar by nearly 60% overnight and gave the government a massive profit on the gold it had just acquired. Think about it. The government bought your gold low, then immediately declared it was worth significantly more. This had profound implications. With a larger gold reserve, the Federal Reserve could print more money, which helped stabilize prices and lower interest rates. Historians still debate whether this policy truly ended the Great Depression, with many arguing that World War II did most of the heavy lifting. But one thing is certain, the era of gold-backed currency for ordinary people ended. For decades, until President Gerald Ford signed a bill making it legal again. So, did America steal its citizens' gold? Legally, it wasn't theft, since the government paid for it, but it was a forced sale under the threat of prison, with a fixed price, immediately followed by a revaluation that massively profited the government. In any reasonable interpretation, that sounds like confiscation. The episode set a deep precedent. When crisis hits, private property can bend to the collective need, as defined by those in power. The question for us today is whether we've built better protections, or simply shifted the form of wealth a government might target in a future emergency.